Hey, what's up, everybody? It is Monday, December 19th. Another down day in the market, but we came off the lows. I'm going to talk about that in a minute. And actually, today was like the fourth day down. So Friday, we had another tax drain of $19 billion. That puts the two-day drain last Thursday and Friday at $71 billion. So that's getting, around the level that I thought. I said like 90 to 100 billion. We could have a couple more days of tax drain. And this is normal. I mean, this happens every quarter. So yeah, this was expected, and this is the reason for the market weakness. I mean, you drain those financial balances, there's no buying power. All right, that's what it's all about. Of course, you're going to hear about monetary policy, and everything is going to be blamed on monetary policy and the fear of interest rates. And I'm seeing now also the fear of recession. The recession narrative, the recession story, that's kind of going up. And you also have the monetary policy story, but now I'm seeing more people cite the fear of recession, or at least I'm saying that in the headlines. And I'm going on record as to, I've said this before, I do not see a recession in 2023. As a matter of fact, I see a boom. And that is because of, we're going to continue to see an increase in these interest income transfers into the economy because of the rate hikes. That's one aspect of the rate hikes that is never mentioned or never discussed, completely, ignorant about it from the monetarist camp. They don't talk about that. They only talk about interest rates going up. I mean, that has consequences, in an area of different realms, of different possibilities. So that's never discussed. And the other thing that we're going to see is big increases next year in January in Social Security benefits and all those things that are affected by cost of living adjustments. Could be a record increase in Social Security benefits, and that is going to be, I think, extremely bullish because it's just going to boost up the level of fiscal flows to a higher plateau. Same thing with these interest income transfers. So I'm not worried about that. I'll tell you what I am worried about a little bit, if you want to know. It's this continuing ridiculous saga of the debt ceiling. I mean, this is, it's the same bullshit we go through every couple of years. And, there's, I don't know. I mean, I just don't know. I said in previous videos that I made that I think they're going to do something, because if they don't do anything, then that military budget that was just passed, which, by the way, I think Congress authorized an additional 45 or 48 billion above the level requested by Biden. So not only did Biden request what was, I think, a record amount, but Congress threw in an extra 45, 48 billion, which again, the ridiculousness of it, which I point out every single time, is you never hear anyone ask the question, how are we going to pay for it? But if it has to do with infrastructure, if it has to do with healthcare, if it has to do with unemployment benefits, if it has to do with the environment, if it has to do with anything else, then it's always, we don't have the money. But when it's military, when it's war, when it's defense, when it's Ukraine, it could be 40 billion more than asked for. It could be 50 billion. It could be 100 billion. The money is always there. You know the game. I don't have to explain it to you. But the debt ceiling is something that is like kind of a worry to me, because that could really throw a wrench into the fiscal picture. I mean, if it comes to a point where there is no agreement on this, and where it does not get increased, and where Treasury has to not just operate under extraordinary conditions, which is a temporary measure where they can continue to make payments. But then that, that could, at a certain point, it could really slow down the whole fiscal flow situation. And I think, that would be a negative development for the economy. That would raise the prospect of negative GDP growth. And again, I don't see that happening because I think these guys, they're going to have to come to an agreement because they want to fund the military. And they're going to be hearing about it from their benefactors, which are the defense contractors and people inside the military themselves. So I think it'll get resolved. But I'm just saying at this point right now, that is something that, kind of like I'm looking at as a cautionary thing. Other than that, if we set that aside, as I've been saying, the tax drain in December, that's a quarterly thing. We're gonna get through that, and then the regular course of spending will recycle those funds back into the economy. We're gonna have a positive market response. So my recommendation is to be buying into this period of weakness that we're in right now in December, which, by the way, I told you this was going to happen. I said way back in September that we were going to see this in December. And I'm also telling you, we're going to see it again in mid-March and then in April of next year. But hopefully next year, because of the increase in fiscal flows that I anticipate, again, coming from interest income transfers and coming from increases in Social Security and other benefits, the negative effect, hopefully will be, a little more muted. That's what we saw right back in 2020 and 2021 with the big, we didn't feel any of these drains really when we were in that period of the big unprecedented pandemic stimulus that we got. There was so much spending that it swamped. Now, I don't think we're going to have, an equivalent of that sort of fiscal flow next year, but it will ramp up. And I think as a result, it's going to make these quarterly drains, less impactful. But anyway, look, if you know about these things, and if you're aware of the effect they have on the market, you make money with this. So it's not something really to be afraid of. If you can profit from this, if you could take advantage of this because you understand what's going on and they come, in a regular cycle, then what's the problem? I don't see what the problem is. You just got to understand it. You got to take advantage of it. So I did some buying today. I did some buying in bank stocks, and I took profits on a position I've had for a long time, which is in First Solar. FSLR, I got into that stock way down when it was like in the 60s and the 70s and the 80s. I sold out today at 156. So that was a really, really good profit. So that's the update for today, folks. We'll see what's going to happen. Hopefully they raise this debt ceiling, but I'm buying into this dip, and I recommend that you do the same thing. Bye.